You pay for your groceries, you pay for your coffee, you pay for gas, takeout, streaming, your phone bill, your gym membership. Every single one of those transactions is either earning you something or earning nothing. And for most Canadians, it's earning nothing. Not because the options don't exist, because nobody sat down and explained them. The average Canadian household spends around $4,800 a month on regular expenses. Over a year, that's $57,600 flowing through your wallet. The right credit card, used correctly, turns a meaningful percentage of that spending into cashback, travel, or points worth hundreds of dollars a year. The wrong card, or no card at all, turns it into nothing. There's one rule before any of this makes sense. You pay your balance in full every month. Every time, without exception, because a card earning you 5% back on groceries while charging you 20% interest on a carried balance is not a rewards card. It's an expensive loan with a loyalty program attached. If you pay in full, let's talk about what's actually available to you in Canada in 2026. How to think about this. Before the rankings, a framework, because the best card for you depends entirely on how you actually spend money. There are two main reward types: points and cash back. Points give you more value per dollar if you redeem them strategically, especially for travel. Cash back is simpler. You know exactly what you're getting. There are two main networks. Visa and Mastercard are accepted almost everywhere in Canada. American Express has slightly more gaps, some smaller merchants, certain grocery stores, but offers some of the strongest reward rates available. The smart move for most Canadians in their peak spending years is to hold two cards, one Amex for the high reward rates where it's accepted, one Visa or Mastercard for everywhere else. With that in mind, here are the 5 best credit cards in Canada for 2026, ranked. Number 1. The American Express Cobalt card. This card has topped nearly every Canadian rewards ranking for 9 consecutive years. In 2026, it holds that position for good reason. The annual fee is $192, charged at $15.99 per month rather than as a single annual hit. The earning structure is built around how Canadians in their 30s and 40s actually spend. 5 times points on eats and drinks, that means groceries, restaurants, coffee shops, and food delivery. 3 times on streaming subscriptions, 2 times on transit, ride shares, and gas, 1 time on everything else. For someone spending $2,000 to $2,200 a month, the first-year value, including the welcome bonus, reaches approximately $1,380 to $1,400 after fees. The points transfer one-to-one to Aeroplan and several hotel programs, which is where the real value unlocks if you travel. It also includes solid travel insurance, Instacart credits, and access to concert and event pre-sales. The one limitation: it's an Amex. You will occasionally hit a merchant that doesn't take it, which is exactly why this card pairs so well with number 3 on this list. Best for anyone whose top spending categories are food, delivery, and groceries, which describes most Canadians. Number 2. The Scotiabank Gold American Express card. Annual fee $120, first-year value approximately $1,186, including a welcome bonus of up to 45,000 Scene Plus points. This card earns 5 to 6 times Scene Plus points on groceries, dining, food delivery, and entertainment at participating locations, 3 times on gas, transit, and streaming. And here's the feature that separates it from most Canadian cards: no foreign transaction fees. Most Canadian credit cards charge 2.5% on purchases made in foreign currencies. On a $5,000 international trip, that's $125 in fees that disappear quietly without most people noticing. The Scotiabank Gold eliminates that entirely. It also comes with comprehensive travel insurance, emergency medical, trip cancellation, baggage delay, which is genuinely useful and genuinely valuable if you're traveling with a family. It's also an Amex, which means the same acceptance caveat applies, but as a standalone, everyday card that handles both Canadian spending and international travel without fees, it's one of the strongest options available. Best for Canadians who travel internationally at least once or twice a year and want one card that handles both daily life and vacation spending. Number 3. The Scotiabank Passport Visa Infinite card. Annual fee $150, welcome bonus up to 60,000 Scene Plus points, first-year value approximately $682. This card earns 2 to 3 times on groceries, dining, entertainment, and transit, solid but not exceptional on its own. What makes it worth including is what comes attached: 6 free airport lounge visits per year through the Visa Airport Companion Program, comprehensive travel insurance, and, again, no foreign transaction fees. It's a Visa, accepted everywhere. The strategic case for this card is pairing. If you hold the Amex Cobalt as your primary card for food and everyday spending, the Scotiabank Passport fills every gap the Amex can't. You use the Cobalt where it's accepted and earns 5 times, you use the Passport everywhere else, and at every airport. Together, these two cards cover essentially all Canadian spending at strong reward rates with no foreign transaction fees and 6 lounge visits. Best for anyone who already has or is considering the Cobalt and wants a Visa to complete the combination. Number 4. The Scotiabank Momentum Visa Infinite Card, or its close equivalent, the CIBC Dividend Visa Infinite. Annual fee $120, often waived in year 1. These are cashback cards. No points, no transfers, no strategy required. You spend money in your top categories, groceries, gas, recurring bills, and a percentage comes back to you automatically. The Scotia Momentum earns 4% on groceries and recurring bills, 2% on gas in transit, and 1% on everything else. First-year value typically lands between $800 and $1,000, depending on spending. This is the card for someone who finds the points ecosystem genuinely confusing or time-consuming and would rather have a simple, honest percentage back on their real-life spending without thinking about it further. There is real money here. 4% on a $1,200 monthly grocery bill is $576 back from that category alone. Best for Canadians who want straightforward cash back with no points management, especially good if groceries and recurring bills make up a large portion of monthly spending. Number 5. No fee options, specifically the Rogers Red World Elite Mastercard and the Tangerine Money-Back World Mastercard. No annual fee. Both offer meaningful cash back, Rogers at a flat rate on all purchases, Tangerine with 2% in up to 3 custom categories you choose yourself. These are not consolation prizes. For someone earlier in their financial journey, building credit, not yet spending at premium card thresholds, or simply not wanting any annual fee commitment, these cards return real value on real spending. The Tangerine card in particular is underrated. Choosing your own 2% categories, groceries, dining, gas, recurring bills, entertainment, and rotating them to match your life is genuinely flexible. Best for Canadians who are newer to credit cards, prefer 0 annual fee, or want a low commitment starting point before moving to premium cards. The real math. Let's put actual numbers on what this means over time. A Canadian household carrying a no rewards debit card for all their spending earns 0 on $56,600 of annual transactions. 0. The same household with the Amex Cobalt used correctly on food and the Scotiabank Passport for everything else conservationally earns $900 to $1,200 in combined rewards annually after fees. Over 10 years, accounting for modest spending increases, that gap between doing nothing and doing this correctly is somewhere between $10,000 and $15,000. Not from investing, not from a salary increase, from the same spending you were already doing, just routed through the right card. That is not a small number. That's a TFSA contribution. That's a year of a child's education. That's real money that either stays with you or stays with the bank, depending entirely on one decision. The decision most Canadians make by default because nobody explained the alternative. The right credit card strategy in Canada in 2026 is not complicated. Pay your balance in full every month, every time, without exception. That is the foundation everything else sits on. Match your card to your actual spending, not your aspirational spending, not the travel you plan to do someday, the groceries and gas and takeout you spend on every single week. Consider 2 cards if you're ready, 1 Amex for the high reward categories, 1 Visa or Mastercard for the gaps. Use tools like RateHub, Credit Card Genius, and Rewards Canada to compare current welcome bonuses before you apply, because those bonuses change and the timing of your application matters. And check the income minimums before you apply. Most premium cards require a personal income of $60,000 or a household income of $100,000. The money you're already spending is either working for you or it isn't. In 2026, there is no good reason for it to be doing nothing. If this video helped you figure out which card actually fits your life, hit subscribe and turn on notifications. Every week, I'm breaking down the financial decisions that matter most for Canadians. Thanks for watching, and I'll see you in the next one.